Welcome everyone to the Kendall Report. Much calmer evening. Didn't get all riled up from Twitter today, but I just want to remind you, you folks are doing a great job. We're getting lots of likes. Keep the like button flowing. Subscribe and make sure you tell your friends about the channel. So let's talk about a couple things. The title of this video is that basically the bottoming process is starting, or recovery is beginning. And I'm sticking with this theme here, and you'll see from the database, I know probably some folks are going to tell me my database is lagging, but it's actually not. It looks at current trends and a lot of different metrics, and we're still holding some pretty key levels on the short-term basis. On the intermediate, as I mentioned, we ticked up a couple percent, which is not material yet, but I think it will become so. And I think so far what we're seeing out of the markets, there was no collapse today. There was a big war going on. Those of us that were in the live room saw the war going on roughly between, we'll call it 40.42 to 40.57. We printed up to 64 for a minute, and it just came back. And then at the end of the day, there was some decent selling that came in. And so one of the hypotheses that I will talk about is that we probably have a retest of the low, and there's a scenario that I've watched happen. Don't know if it'll happen again, but the last couple times that we've dumped like this and we got down and we printed a low like we did today at 4,006, we saw a retest of that low, and it comes within a buck of making a new low and then reverses and goes vertical. We'll see if that happens. That's happened, I believe, 4 times I was able to count. I'll go into more details here in a few minutes in the technicals on this, but there's definitely a pattern setting up, already seeing some moderation in PPMs. Other things are starting to happen. So I'll get into those details here in just a minute. So let's take a look. Yesterday, the only thing that came out was Dallas Fed. I think we're going to get through, after last night's rant, we're going to get through tonight's video pretty efficiently. We'll get the numbers out there so we have ideas for trading tomorrow. But Dallas Fed came in, was expected at minus 13. It came in at minus 12.9. So as expected, still seeing lots of deterioration in the economy without a doubt. And I've been talking about that for a while, and we're going to continue to see that. And I'll just reemphasize that the economy is not the market. I really, as I've been portrayed like I'm super bullish, I am not really that bullish, but I do see some key levels and some patterns yet that haven't been satisfied, in my opinion. And I'll continue to go down that trail until I'm told differently. But let's talk about tomorrow. We've got mostly metrics coming out around the real estate market, which we're looking at. The FHA prices expected to be up 0.9, 18.3 year over year. Case showers coming out, same thing, 18.7 year over year. So still lots of inflation still evident at the moment in housing. And I won't cover it tonight, but I was looking through a number of things. I was looking at lumber, and I think lumber is pretty close to bottoming here. So we'll see. I think the big theme as we go forward is going to continue to be about energy, commodities, those type of things. I still don't see a play with gold with the strong dollar. I'm not going to, and in fact, I will. I will actually cover the dollar, and in that process, talk a little bit about the yen, because a lot of these currencies are really under a lot of pressure, and I think they're going to have to defend these things or really have to pay up. And I know folks that are looking at this winter and looking at the energy cost and all of that, it's just going to get really bad, especially if you have to buy energy in dollars. That's going to make it even worse. And it's just interesting. I'll just make a comment real quick on the whole energy scenario. We're basically out of everything, right? No electricity. We're not Sri Lanka just yet, but they're trying to get us there. So there's just no energy for anything, is what it would appear anyway. And especially in electricity, everything's going to be electrically powered, but we have no way to produce electric. So it's kind of interesting scenario, other than a couple silicone panels hanging around on a roof and around. That's pretty much what we're seeing as far as, the energy solution, right? There really isn't one. And I think that's going to continue to be the case. That's why we see that upward slope in crude and all that. So I'll touch on that a little bit more. But this is becoming, I think, potentially a major crisis. And I suspect everybody's going to have higher prices, but it's really the shortages that concern me, and I think are concerning a lot of Europeans as well, especially those in colder climates. That's going to be an issue, I think, as we come into winter. We all know that. That's a given at the moment. But the other things coming out tomorrow are the JOLTS, which I don't think anyone cares about. 10.4 million last month reported as job openings. And it's amazing that I mentioned this last night, that at the whole during the Jackson Hole presentation, that they never mentioned the strong labor market. And I'm trying to keep from laughing right now, thinking that the whole reason why everybody got all excited about what Powell said, because he said it in a terse manner. He said it directly. And as I laughed about last night, it's funny, nobody believed them. They were going to pivot. That's kind of the narrative that's been out on the planet, is that as soon as something breaks, the Fed will pivot and go back to QE again. And I think there's a number of issues that are going to keep them from doing just that. So I am all in on the higher rates. I'm not going to do it tonight, but tomorrow night I will go through the yield curve expectations and show you once again. I still have the same expectation I had a month ago, but I'll rebuild out how I think the yield curve is going to end up looking, and it's going to be, I think, pretty ugly. I'm certainly on the recession story. I believe that's what's going to happen. I just think we have some more work to do before we get into any kind of big major end of the world rollover. And like I said last night, just to recap just a minute, is that the markets acted on Friday as if there was this major event like the Lehman moment. That's not what's going on at all. And in fact, we didn't really see that collapse in prices earlier today. We did see some downward pressure, but then for the most part, the market traded in a not positive, but traded well off the lows for most of the session, attempted to squeeze the market a couple of times. But we ended up, like I said, closing lower. We're still trading at 40.32. Last night, overnight, when we were talking last night, we were trading around 40.20, we'll just call it 40.20, 40.35. We're still in that same range right now. So we're still range bound. And like I said, I'll go through the details, but I'm still expecting to see some recovery. Nothing really great, you'll see here in a minute, but there is going to be a little bit of a bias in the next couple of days. We may see a retest on Tuesday to tomorrow's action. We may see a retest of that 4,006 level. If we get through there, I'll try to lay out exactly what I think would happen if we do print through that number, where the support will be, or where to look for a support and a bounce to occur. So I'll go through those details as well. Just checking my notes here, make sure that I covered everything. Yeah, S&P, just kind of recap, down 0.67, NASDAQ down 1.02, Russell down 0.89. There were two sectors positive yesterday, and it was utilities and energy. And they're both pretty much the same anymore, right? Utilities, higher electric prices, they're going to do good. Typically, utilities is one of these defensive sectors that people talk about. It's got a whole different context, I think, right now. We're in a different place than we have been for a while, just because of all these energy sector issues that exist. And none of those issues are going away anytime soon. I mean, let's face it. I mean, we're going to see I think prices spiked quite a bit, and that's going to put a lot of pressure on the markets and on the economy and all that stuff ultimately. So we'll see how everything sets up. Let's go ahead and get into the database tonight so you can see what happened there. And like I said, we should be able to get through tonight's presentation fairly quickly. So here we are. Go to the daily. Bear with me one second. Everything got jacked up on my screen, how I usually have it. It's coming up, one sec. Okay, so what we're looking at here is we're at 62.94% long on the daily. We're seeing a little bit of selling, but not a lot. And that's the thing that's really is interesting here. We saw 688 symbols on the sell side, 67 on the buy. So we're still seeing attrition. But if you recall, going back when we were at like 82, 84% bullish several weeks ago, I said we're going to see a rotation back in. We're probably going to go to 68 to 62. We're right in that range. The extreme that's allowed at this moment in time is about 58% bullish. If we get below that, that could show that there's more systemic issues with the trends in the markets. And I think this is really revealing though, because I think this entire pattern that we're seeing is actually still very positive, seeing this type of bullishness. And I keep trying to explain what you're looking at. And if you're new to the channel, what you're looking at is all of the signals on individual symbols. In fact, on 10,118 symbols actually are still in a short-term trend. And what that means, they put in a bottom. I talked about this last night, that the bottom was at 3,600. We're at 4,000, right? So we're just doing a retracement, maybe a right shoulder before another rally. We'll see how it sets up, but all of these trends, 10,000 of them, are in the same type of configuration where we came off the lows and now we're pulling back in, but we're not breaking down the trends yet. And the fact that the indexes got hammered the other day, which are heavily weighted, even them, we didn't break down. We still have weekly uptrends in place off of the lows. And, if we are setting up a larger bottom, which is possible here, is the bottoming process is very elongated sometimes, depending on how this sets up. The beauty of having this database, and you folks being able to watch and hear me talk about this, I've watched every day of this database from 1998 forward. That's a long time. I live and breathe this database every day. So I'm very understanding how it normally reacts. And the fact that we're up to 35% bullish on the intermediate is telling me a lot of things too about the bottoming process. I know that the end of the world's coming because Powell talked in a terse mode. As I said last night, this comes from the same people that told it was transitory. Now they're telling you this is no time to stop to anticipate any type of top in inflation. So I think what we've got maybe is a top in inflation, and that may be the emerging story on the back end of this thing. But we'll see how it all plays out. Let's go ahead and get into the technicals. All right, taking a look at the S&P, we are seeing a little weakness. We were up about 7 earlier. We're down 2 right now. You can see that the PPMs are attempting to turn up here just a little bit. for the most part, I wouldn't even call it turning up, but more stabilizing. And we're in a big time trend mode on PPM1 on the downside. And that number is coming in right now. Let me bring up the tablature. That number is coming in right now, 4152. It's dropping about 30 handles per day. So we're going to be 4120 and then 4080. So that number is coming down quickly. And depending on what kind of action we get to see if this PPM starts to turn off will tell us whether that's going to be a major rejection point. That's where we rejected from the other day, was right off of the 10-period moving average. That was the big number. If I go back just a couple sessions, 4207.58 was that number. We had a high that day of 4217.25 on the futures. So that was, we traded just above it, got rejected big time. Also, as you can see, R1 was 4213, R2 4226. So we just went smack in the middle of those and rejected out of here. So the interesting part of this pattern that's out there right now is it does look like we potentially are setting up a right shoulder here. It's still not in play. We don't have the indications from the PPMs just yet that there's any sort of bottom, but I think it will take a close back above the 40, we'll call it 4040 to 4050 just to get some of the elements back in play. So if we can hold this level that I talked about at 06, so 4006, if we can hold that overnight, and even if we get a retest, I'll show you those patterns that we did before. We had a low back here at, I'm just trying to find this. Yeah, here it was. I think it's 36.39, and then the next session at 36.61. There's a couple here. I just I remember in my mind that we came and retested the levels, but we got this big bounce, and I think we could see a retest here. If we take that out, let's just talk a little bit about what could occur on the downside. So notice that S1 is 08, which would be, we'd have to call that a retest of 06 if we get down there. So S1, R1 is minimum expectations for Tuesday. I think there's a possibility of trading up to R2, 4080. I'm not sure how skittish the market's going to be if there's not some follow through on the downside. And I think we probably went from getting a bit overdone off of Friday's action and a little bit of follow through that we got today. So 4054, a close over that R1 number on Tuesday would be positive. If we were to close under 4006, then you can see right away S2, 3982, 3957, and we're getting into about 0.618 retracement of this big rally that we had going back. And the jury's out as far as how this is going to play out. My thoughts here is that we had almost a perfect ABC down, and there could be just a touch more downside. But I think today, Tuesday that is going to be the test of whether we've got more downside or whether we can start this recovery. And I think what we'll see is the recovery start. Like I said, the key number to watch for is that 4054. Anything close above that tomorrow will set a pretty good tone as we come into Wednesday. And of course, we've got plenty of news this week with the employment stuff, ADP, and the rest of this stuff coming out on Thursday. And of course, on Friday, the employment numbers. So we've got plenty to digest this week, and we'll see what kind of narrative comes out of here. Taking a look at the NASDAQ, it's really easy to go through these indexes every night because they basically have the same type of scenario. We're seeing a little bit more of a recovery on PPM2 than we are in the E-minis, and we still have a positive PPM3, which is at a plus 0.14. We should try to rebound back above there, 12,700. Last trade, 12,000, call it 500, 496. The high's been 537. So look for the same type of scenario. S1 is 405 and R1, 12,580, R2, 12,677. So I'm looking at the probabilities of an S1, R2 across the board on all these indexes for tomorrow. Same thing again, make sure you note these numbers. We get through S1, next level, S2, 1308, and it starts to get even uglier at 12,210. So it's 12,308, 12,210 would be the extreme support here. I do expect to see the S1 level hold here. Looking at the RTY, same scenario. We're actually doing, and this has been the case for a while, even going back to when we were rallying back in July, we saw the same kind of characteristic where the Russell was actually kind of leading things. We continue to hold the 40 period moving average here, 1871. The low's been 1879, so we're staying just above that number. Still looking at the potential of the same thing. S1 is 71, R2 1906, R1 1893. So I'm expecting to see these markets recovery. Same scenario. We take out S1, go to S2, potential of getting, I think, a little emotional, maybe trading down to S3. So we don't have a bottom in place unless we close over R1 across the board on the NASDAQ, on the S&P, and the Russell. So make sure you note that. So before you call me out on anything, we need that close to signal any kind of minor low at this time. Otherwise, we've got more work to do, and it will be critical that we hold the lows that we had on Monday. So looking at the treasuries, it's interesting. We're getting some pretty decent acceleration to the upside here. PPM1 is 1.08, 0.78, 0.19. So big time trend mode here. We're looking at the grid for tomorrow. R1, we'll call it 3.13 to R2, 3.15. I mentioned the 3.16 level. That is most likely going to be a peak in the yields for the moment. We did see a little bit of flattening in the yield curve yesterday, but nothing material. And let me just flip over to the weekly to reference that for a minute, because there's some key numbers over there as well. So as we go through the week here, here's that 314 number, which is R2. 319, we'll call it 320 on R3, 325 is RTX on a weekly basis. I don't expect this to get there, but we still have that mixed scenario that I talked about. PPM1 is trying to turn back up, so it's lost a lot of that downward momentum. I'm still looking at that price of, we're going to call it 292, 294 now as the absolute low in yields if there's any dips here, but we're still in that upward slope, and like I said, the dailies are dictating that we're going to at least a 314 to 316. I'm going to cover the dollar and go to the Japanese yen as well, because I think there's some interesting things going on there, or potentially going to go on as well. But we're looking at, I talked about these numbers last night, the potential of going up to the 111.70 area, which is high target 1, which is a fib target 1 on the upside. We still have very robust numbers. This is weekly that we're looking at. So these are strong numbers. The Dow doesn't look like it's willing to lose much of its strength at this time. And I think that will be the continuing story. Now, let me show you the yen here. And the yen has, those of you that have the indicators, this is the fib target tool here. 140, you can see 143.42 is an upward target, 148.151. We had similar targets that were evident for all the way through June. They got recalced the other day after we set the low. You'll also notice that when the market turned south, the expectation was for a move down to low target 3 of 131. We actually got to 130.40. So it projected it down to this low, and then right over here on the 12th of August, we got projections for potential new highs in this pattern and a continuation. We go over to the weekly chart, you'll see that this pattern is hugely, the dollar is just killing the yen. And I think this could maybe bring in some higher yields if we get triggered where the Japanese want to really defend their currency. They may start to sell more treasuries. I'm not convinced of that at the moment. I was convinced some time ago, but I really think, I just want to make a comment here, is that I really think that the test is the Japanese, because they've been doing this QE for so long that we've not seen anything with taking the punch bowl away and seeing what the effects are. And it's going to be interesting to see what their commitment is to the numbers at the Bank of Japan and other entities in Japan are saying that they're going to uphold. So we'll see how that all plays out in the end. But I think we'll see this pattern possibly break out into the levels I just mentioned. Bear with me 1 second here. Okay. All right, so next would be crude oil. Covered that in detail. We continue to move up toward this 96 handle, which we got above, 96.69. So far, 97.37 has been the high. We're looking at R2, 97.01. Don't think we see an R3 print, but I do believe that we're going to stay well over this 87. So I know this is kind of a broken record, but there's not much more to say about crude other than expect anytime you see anything close to 80, between 89 and 87, that's going to be a buy range, and up around 90, 96 plus, as high as 101 would be the sell range. But there is some leeway to the upside. And like I've said, this market is not going away anytime soon. The demand on energy is just off the map. Next market we'll look at is gold. Continuing to see, this is the weekly gold. The weekly gold just continues to climb right along this 200-week moving average. I mean, like I talked about last night, Bitcoin and gold look so similar. It's amazing how the correlation appears to be really tight right now. Gold's not really doing anything. 1247, just continue to climb along this. 1745.90 is the 200-week moving average. I think we stay above that. If the Dow does surge and you see Dow yen get up to levels I'm talking about, or Dow hits 111 plus on the Dow index, and that's not going to be a good thing for gold. And I think we could see some pressure down into the lower bounds of this market grid. Okay, final market cover is Bitcoin. Bitcoin continues to defy gravity, as I talked about. We did see, here's the update I couldn't show you last night, but the PPM1 has turned down just a little bit. It's still negative here at a 0.47, a minus 3.80 on PPM2, so that there's major resistance at 26.4. This is weekly Bitcoin, and that's dropping about 1,000 per week. And then on as far as the key level here, 21,575 is going to be a bit of resistance there, and the key levels to watch, 19,158 is S1. So look for this week, S1, possibility of an R2, which would put us up around that 10-period moving average. Okay, folks, as promised, I said we'd get through tonight's video pretty quickly, and we did. So just make sure before you leave, hit that like button, and let's make sure that you tell your friends, and let's expand the channel and get more people to watch. That's what it's all about, right? All right, folks, thanks again. Get the indicators if you haven't already got them. We are, just a quick announcement on, we're putting things together right now. We're going to be opening up a Discord channel just to talk about and to collaborate together with the indicators. So that's going to be an interesting place to hang out. We've got some pretty proficient people that already are using indicators. So thanks again, and I will see you all tomorrow night, same time. Talk to you then.